Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within corporate filings. Today we're diving into NeuroOne Medical Technologies Corporation's latest report, and let's just say it's got some interesting moves on the stock market. You know how some companies are always looking for ways to get more funding, to grow, to do more stuff. Well, NeuroOne Medical Technologies Corporation is one of those companies. They've got this thing called a capital on demand sales agreement, which basically means they can sell their company stock whenever they feel like it up to a certain amount. And that's exactly what they did on August 15th of this year. They announced they're planning to sell up to $6.75 million worth of their stock. Think of it like this. If you owned a bakery and needed more cash to buy a new oven or ingredients, you could sell a small piece of your bakery to new investors. NeuroOne is doing the same thing, but with shares of their company. The stock they're selling is their common stock. It's called common stock because it's the most basic type of stock a company can issue. When you buy a share of common stock, you're basically buying a tiny piece of ownership in the company. In NeuroOne's case, each share has a very small value, just 1/10 of a cent, which is pretty typical for many companies. And where can you buy this stock, or at least track it? It's traded on the Nasdaq stock market, a major stock exchange. This is where a lot of technology and growth-focused companies list their shares. This whole stock selling plan isn't new. They actually set up these capital on demand plan back in December of 2022 with a company called Jones Trading Institutional Services. Jones Trading acts as their sales agent, meaning they help NeuroOne find buyers for these shares. It's like having a real estate agent help you sell your house. So why are they selling more stock now? Well, they're aiming to raise up to $675 million. This cash infusion could be used for a lot of things like funding new research and development, expanding their operations, or even paying off debts. It's a way for them to get the money they need to keep growing their business. Now, whenever a company plans to sell a lot of stock, they need to make sure all their paperwork is in order, legally speaking. That's why they hired a law firm, Onigman LLP, to give their approval. They've issued an opinion which is attached to this report, basically saying that everything looks good from a legal standpoint for selling these shares. This opinion from their lawyers is important because it gives investors a bit more confidence that the company is following all the rules. It's like an extra layer of assurance. This whole announcement falls under what they call other events. It's a catch-all for important things that happen that don't fit neatly into other categories of these reports. And of course, like with any big announcement like this, they also tell us what new documents are being filed. In this case, they've included that legal opinion from their lawyers and something called cover page interactive data file. This interactive data file is actually pretty neat because it's designed to make it easier for everyone, including computers, to read and understand the core information from the filing. But who's signing off on all of this? David Rosa, the Chief Executive Officer of NeuroOne Medical Technologies Corporation. It shows that the top leadership is aware and approving of this plan to sell more stock. Looking at NeuroOne, they are in the medical technology space, specifically focusing on solutions for the brain. This can be a very innovative and growing field, but also one with high research and development costs and long regulatory approval processes. Their decision to sell more stock suggests they are looking to fund further development or expansion, which could be a good sign for future growth, but it also means their existing shareholders will own a slightly smaller piece of the company after these new shares are sold. This is a common strategy to fuel growth when a company believes its future prospects are strong enough to justify diluting current ownership. It's a balancing act between needing capital and keeping existing shareholders will own a slightly smaller piece of the company after these new shares are sold. This is a common strategy to fuel growth when a company believes its future prospects are strong enough to justify diluting current ownership. It's a balancing act between needing capital and keeping existing shareholders happy. The amount they are raising, $16.75 million, one size, likely helping them not. Alright, that's our breakdown of NeuroOne's filing. What do you think about their strategy to sell more stock? Does it signal a strong future or a company needing cash? Let us know your thoughts in the comments below. If you found this decoded information valuable, please hit that like button and subscribe for more deep dives into corporate filings. And don't forget to join our Discord community linked in the description for more discussions. Thanks for watching. See you next time.